Hello, good afternoon, good evening, good morning, wherever you are in the world. And to you, my fans, I say thank you so much for your support, for your comment, for your encouragement. If you are new to this channel, I want to encourage you to subscribe, to like, to share, and keep track with us. So when we share content, when we create content and share, you will be visible to it. This afternoon, it's afternoon in the US. So this afternoon, I'm coming your way with a different topic. You know, in the past episodes, I've been sharing content on cybersecurity domain, the cyber landscape, and how we can help support the efforts to help companies protect the environment, to secure their assets, and they pay very well if you have the skills to do that for companies. We're still doing that. By grace, we've trained pretty much over 100 students who are out there working, and their lives are getting changed, and they are helping their companies and their families and buying new homes and things like that. We are still pursuing that mission. However, today I'm coming your way with a different mission, from a different perspective. And as you see on the screen, the topic for today is contingency plan for life. Right. Now, in the cyber industry, we call something contingency plan. And what a contingency plan is that it is a plan B, a plan that you will have to secure your environment, your company, your organizational assets, in case of a contingency, in case things don't go according to plan. And today, we're talking about contingency for life, not about cyber, but then something that you can use to protect your own life in times of need, in times of contingency. You know, by grace, we are healthy in our youth stages up until we hit the 40s and the 50s, and we keep working. But there comes a time when you have to retire. There comes a time when you realize that the energy you have that you've been using to clock in and clock out, you don't have that energy anymore. And unfortunately, when your energy wanes, your bills don't go down. They remain the same. They keep coming. But then, how do you ensure that even when you are not still in the labor force, you can still be able to earn income and protect yourself? That is what we are here for today. So contingency plan, as I said, is plan B. It helps companies create the necessary resources that can help them continue with their businesses and their organizations in times when the primary dependence is no longer there. It helps them to continue with business. We call it business continuity plan. So in the cyber world, it helps in ensuring availability. Okay, we have confidentiality, integrity, and availability. This one helps in protecting availability. So here we're using the same strategy to protect our lives, to ensure availability of resources when we can no longer tap into our energy to work. So if it is your first time, as I said earlier, please like and share this channel to your friends. Let them hear this. It's critically important. It does not matter which part of the world you are. You can be in Australia, you can be in Asia, you can be in Europe, in Africa, in US. Plan for your life. Do something now. You know, we make hay when the sun shines, they say, right? You plan something today, so when the days come that you can no longer work, you have something. It's a biblical advice. You can do something to help yourself and to help your family. Let's get into the material so we see what we have to share. Right. So in this discussion, we will be looking at a few areas of focus, and we will be looking at these 4 areas of concentration. We want to base it biblically. We want to base it on biblical advice. People perish for lack of knowledge. Okay, Hosea 4:6. We will look at that. Now, how do we perish in this case when we have no knowledge in a specific area? And then we'll look at contingency plan itself, a better plan for the days when you cannot work. Okay, how it is critically important. We will also look at the vault, and what I call the vault is your ability to create a bank for yourself. You should have the ability to borrow money from your own bank, even if you want to apply interest, and pay back to yourself if you want to add interest to let it grow. And why you should not keep your money in the bank. Okay, I'll tell you that today. Why you should not keep all your savings in the bank and how disadvantageous that is. Then we'll look at why it is not been told for all these years, why we haven't known about it for all these years. We'll look at that, right? Okay, so we say for lack of knowledge, people perish, right? It is in Hosea 4:6. Bible says, for lack of knowledge, my people perish. Knowledge is critically important for life. If you don't have knowledge, you will be behind the race. Assume someone is sick and the medicine for his solution, his cure, is put under his pillow and he's not aware of it. He puts his head on that pillow every night in pain when the medication is under his pillow until someone tells him that the medication for your cure is under your pillow. He can put his head on that pillow and not know that the solution is right here. What I'm driving at is to the fact that all the struggles that we go through today, there are things that we can do to make life better. But until you know, you cannot apply. Unfortunately, there are some of us who, even when we are told, even when we are informed, we still ignore the advice and continue our struggles in perpetuity. That is not, excuse my language, wisdom. We need to be proactive. We need to plan in a way that when we hear some information, we want to run with it. I am absolutely not that gullible. I don't easily take things that everybody tells me, but I assess them and try to see the logic in it, and I try it if I have to. Okay, so if I want to tell you about the things I have tried in the past, like ZipRecruiter, 5links, Legal Shield, and all that, I've tried it. When I try and they don't turn out to be what I thought they were, then I retract. So we should not really perish for lack of knowledge. And what I'm going to talk about after this slide about the contingency plan for life is going to reveal some of those ignorance that we have encountered in the past and how that has affected us. I'm going to talk a little bit about that. This particular area has to do with a plan that you need to have to help you when you can no longer work, right? When you can no longer engage in productive income generating activity. We all will come to, if you are blessed to grow old, after 50, 60, 65, obviously, you will retire. When you can no longer clock in, clock out, and depend on a paycheck, what do you do? And more so, even when people are young, there comes a time when illnesses will set in. Sickness, critical sicknesses can take away your strength and you cannot work. So what do you depend upon in that case? All right, so I am technically driving at life insurance. But what we have not known, being the lack of knowledge that has affected some of us badly, is the fact that there are different types of life insurance. Let me throw out a caveat right here. I am not an agent. I'm not a life insurance agent. But this is something that somebody shared with me, and I was a little skeptical about it. I did some research and I came to that conclusion. I have life insurance. You may have, listening to me right now, you may already have a life insurance. But how do you make your life insurance work for you? That is what we're talking about, right? There is something we call term life insurance. Term life insurance is a temporary life insurance. They sell it to you, and it's only good for a period of time, 10, 20, 30 years maximum. And what it does is that you pay premium into that that policy, and after some time, the policy ends. But then you realize that as the policy ages and you age, the face value of the policy, the coverage of the policy comes down, and your premium goes up. Okay, that is what happens. I had one that I was paying $52 a month, and it was about 500,000, right? And it was for 30 years. As a matter of fact, my case, it was even 99 years until I age 99. Okay, until my age is 99. Okay, so if I bought it at the age of 30, it will be there for me until 99. Then upon calculation and upon the fine prints that I received from the company upon approval, I found out that by the time I am 99 years old, that is pretty much, it sounds pretty much like it's for life, but it was a term policy. When I am 99 years old, the policy will be zero. Yeah. The policy coverage face value will be zero. And as of the time when I was canceling it, I started with $52. I was paying $148 per month. Okay, so which means, and at that time, the value has dropped from 500,000 to 304,000. When the premium is going up, they are taking more from me. The coverage is on the opposite direction. Okay, so I was comfortable with it when I got it initially, in the sense that, if anything happens to me, at least my family has something. And if up to 99 years, I mean, obviously my kids will grow up, and if anything happens to me around 70, 75, 80, 85, I'm covered. But then that is when I will be paying more into it, and what I will get in case something happens to me within those age ranges, what they give me is nothing. Besides that, you can pay for 5, 10, 15 years into the policy, and then something happens, when you are in hospital for whatever reason, and you have to be there for a month or two. Obviously, the first thing you're going to be thinking about is not your bills. You might not even have the mindset because you are probably in pain. And if your wife or husband or other family members do not remember to pay your bills for you, you will come back and face the bills anyway. Then with the policy, what happens is that when you miss a month and it runs into more than 30 days, the policy lapses, you lose it. Okay, so it happened to someone when this woman, the husband passed during COVID. The husband had a 500,000 policy that happened to be 10. And COVID happened, the man became sick and was in hospital, and the family were all, praying for him and trying to do everything to help him come back home. 1 month passed, 2 months passed, the man didn't make it. The wife, after the funeral and everything, ran to the company, say, "Oh, I know my husband has a policy." She was running everywhere trying to find a policy, and eventually found it and called the company. They said, "No, last couple of months your husband didn't pay, so you lost it." Here comes the woman. They have probably paid that policy. According to her, they paid that policy for about 12 years. So here comes a woman with 4 children. And when they thought the breadwinner of the family is no longer, but had left them with something, that thing was gone. All right. So we need to learn out of that. Having a term policy is not good enough. The money that they had paid month after month, in my case, I paid for 5 years. Month after month, in their case, for 12 years, that money, if you purchase a different type of policy, can generate cash value for you. And that becomes money you can take money out of, you can withdraw out of. And the policy should have certain riders that can make provision for you when something happens to you. All right. So you can have a life policy that we call whole term or whole life, permanent life policy. And that type of policy, you will be accumulating savings when you pay the premium month after month. And as you do that, the money that you are paying into the policy, becomes money that you are literally putting in the bank. So when you need money to borrow, to purchase a home, to purchase a car or anything, you can go into your own policy, withdraw money that will not, you can decide not to pay any interest on, will not require you to pay interest back on. And even if you want to pay interest, it will be something that you will afford. Literally, you are paying into your own deposit, right? Besides that, when you are critically ill, you are hospitalized, you have a life-threatening situation, cancer, stroke, or any kind of those critical illnesses, the policy allows you, okay, when you talk to the agents, the life insurance agents, ask them questions. The policy will allow you to withdraw. If you have 500, you can withdraw up to about 400 or 450, about 90% of the face value of the policy to help yourself in times of need. It does not matter when even when you recover. Obviously, that will be the best prayer, right? When you recover from the illness, the money, you qualify for the money based on your diagnosis. They give it to you. And when you take it back and you want to purchase another one because you came back to life, that is another discussion altogether. You have the right to do so. But then here comes money for you that can take away your stress. When a husband and a wife are together and one becomes sick, obviously the other person will need to be available to take care of the sick person. So eventually both most likely might not be working. Even if one goes to work, how can you work with that kind of mindset. I mean, with all the stress and the pressure from one partner being sick, how can you even concentrate to do any meaningful business? So at that point, if you have children, your children will be stressed as well, because all of a sudden the lifestyle of the family goes away. That is why it is a serious contingency plan that we need to think into. We need to work at it. Put something as little as it is into a life policy. Now, let me show you this scenario, how it can work this way. The cash vault. The cash vault that I was talking about is what I explained earlier, when you can put more money into the account, into your life policy. If I have, let's say, 10,000, 50,000 in the bank, I can take a chunk of it, okay? You might want to leave something small there that is liquid enough for you to easily go to the ATM machine and withdraw for basic immediate needs, right? So the advice is not for you to bring your savings balance to zero, but you can put the chunk of it into a life insurance and the money will not be lost. Instead, it's going to generate money for you. When the banks are keeping your money in the bank and are giving you 0.25, 0.37, 0.75, if you are lucky, you get 1% interest on the money. Life insurance gives you very high interest. Okay, they give you much more. It's not like they will give you that kind of 1% if you are lucky, or 0.25, 0.37, 0.75 kind of interest. They will give you like 4%, 6% based on varieties of factors, and also the economy, how the economy is trending, stock market and all that, and the government rate of interest and all that. Those are some of the determining factors. But then they pay better. Now, you realize that when you go to the bank to borrow money, when you take a credit card, for example, if your credit report, if your credit score is good enough, if you are in the 700s, 750s and things like that, your rate of interest on that credit card is about 12%. If you are lucky, something around 9%, usually 12%, 13%. Those whose credits are not great enough, if you are in the 500s and the 600s, you can get interest on a loan from the bank to be as high as 24%. Seriously, that is robbery if you don't see it so. But we go for it anyway. Why? Because we need money desperately. Then that ends up putting us in debt, because whatever amount of money you put on the credit card gets scooped away into interest. Very, very little. If you end up being the one paying the minimum that they give you, then you are even in much trouble, because you can pay just $500 worth of credit card. You can pay for it for life, because whatever you put on it, they scoop it into interest. The interest is this big. And time over time, month over month, year over year, you realize that you are putting money on this credit card is never going away, because they lured you into something that the rate of interest they are taking on what they loaned you is so big. But remember that the money they loaned you is money somebody has gone to deposit in the bank, and they are giving 0.75, less than 1% to that person. So you keep your $20,000 in the bank, and after a year, you realize that you only gain about $50, $100. If you are lucky, $200. I've worked in the bank for 80 years, so I know what I'm talking about. I've worked with Bank of America for 8 years, so I know what I'm talking about. Okay, so the best is for you to go take that money, leave something little there for liquidity, take the chunk of it, purchase something that will be an investment into a high yielding interest investment or deposit. That will give you better return for your money. This is something that the majority of us don't like doing. Let me show us something that I have designed to help us explain this better. Got a screen pen here. Here is it. Right. So let's take this. Let's say you have 20,000 in the bank, and you use that 20,000 to purchase a 500,000 policy, life insurance policy. The moment you purchase that 500,000 policy, you put your 20,000 on it, your cash vault, your vault is this, 520K. Okay. Now, because we don't want all the 20,000 to sit on the money, on the 500,000 over there, because right at the time when we have invested that 20,000 into a life policy, we can withdraw anything below the 20,000. So let's assume this is hypothetically a policy for someone age 30, 35. So chances are he may be paying something in the region of 400, 450, about that monthly. Okay, so in a year, let's say his payment may amount to, I'm using a hypothetical case. Okay, again, I'm not a life insurance agent, so my understanding is what I'm using here. If you want better advice, please talk to a life insurance agent. If you want one in the United States, I have a good number of them that I can reference for you, some from our African background that can better advise you. Okay, so right now you have 520,000 in your life insurance policy because you put 20,000 on a 500 face value purchase, right? You can withdraw anything below the 20,000 whenever you want it. But if I want to leave something there to cover my insurance policy, just in case a time comes when I'm not able to pay and there is money there to take care of the payment for me, I would take 15,000 out of the 20,000. So I leave 5,000 there to cover up for at least a year. Okay, if I have the ability, I will still be paying the premium anyway, but then I leave 5,000 there as a shield. In case I'm not able to pay any particular month or 2 or 3, there is money there to cover the coverage for me, just so my insurance policy does not lapse, does not expire before I come back. Right. So with the 15,000, I am going to purchase another one. Now, right here, I initially was worth 20,000 in the bank. The moment I purchase a 500,000 policy and I leave 5,000 on it at the end of the day, my worth has grown from $20,000 rich to $505,000 rich. This is my worth right now. You know how we talk about the worth of the rich people? It's not the liquid money they have in the bank. It is all their resources, all their life's accomplishment, the businesses they have, the stock they've purchased, any money they have anywhere, all the buildings, the houses, and the properties they have put together. That is what we call their worth. So my worth right now from 20,000 has grown from 20,000 to $505,000 overnight. So I'm not going to leave the 20,000 there. I leave just 5,000 on it. I take 15,000 out of it. I purchase another 500K. Okay. I purchase another 500K with 15,000. You add it, okay? I add this, I get 515,000, but I'm going to do the same thing, okay? I'm going to take 10,000 out of it, leave 5,000 on it. So I am left with 505 again, and I have 10,000 for another purchase. You put this and this together, I am $1,010,000. I think it's 1.01 M, right? Rich. That is my worth. And if I did this over 6 months, just within that 6 months, I have grown my financial worth from, and I'll tell you why it is a financial worth in a minute. I have grown my financial wealth from 20,000 to $1 million. At this point, I'm a millionaire. Okay, so I take that 10,000, I purchase another 500, I add the 10,000, it gives me 510. I'm doing the same thing, I take 5,000 out of it, it gives me 505. If I add this, I now have 1.015 million. Okay, dollars rich. I take 5,000 from here again. That's why, how come I left the 505 and I purchase another one? Okay, and that gives me another 500. I have 505 here, so that finalizes to 505. Put all together, you have 2 points. Let me make that clear. I have 2.02 million. In a year, if I do this in a year, that is my worth. That is how rich I am right there. So from a 20,000 savings, I now have a $2 million policy. Now, this is the policy that I do not have to die for my family to gain. I can make that provision for them, and even better, but whilst I am alive and they need me, this money comes to make the family better. It comes for us to continue to live in our home, for us to continue driving our luxury cars, for us to continue life. If I recover from the illness, then life is better for all of us. This is why we call life insurance, not death insurance. Okay, this is why we call life insurance. You know how those of us from African descent, in the Black community, particularly the African descent people, we don't like talking about life insurance because anytime we hear about it, we think it is a bad omen. We are talking about death. But this is not something we should shy away from. It will happen to any human being. This instead can give you a better life. Think about it. Why is it that the rich grow longer? The rich age older, the poor die younger. It is because when you have wealth, when you have money, you can live a better life. You can live stress-free life. And all those things come to increase your lifespan. The poor, they don't eat well. They don't know how to have a good or better health care. So they are younger. They are more stressed about life's experiences. So if you have wealth, there are a lot of people who end up in the hospital because they don't have the financial means to get a good health care. They are left to rinse. They die when they shouldn't. Okay, imagine someone in the hospital and he or she is the breadwinner of the family. The family no longer has money to live on, and the wife comes there crying and stressed because of what, the fear that or the wife or the husband. You know, one partner comes crying, thinking that, oh, if this person goes away, then it means the whole family is doomed. That ends up killing the sick person. But this right here is a strategy to plan our contingency, our life in terms of contingency. So wealth care is healthcare. Wealth care and healthcare, they go hand in hand. You know, like I was saying, we in the Black community, we don't like talking about life insurance. But then when somebody dies, when people come, the first thing they ask the surviving family is, did he or she leave a life insurance? Then it becomes an important thing for us to. And at that point, it's too late. At that time, it is simply too late. And this is why it is a rude awakening to all of us. And I'm bringing this to conscientize us because, you know, a lot of times when I get this information, I just cannot sleep over them because I know as much as I have been ignorant of it, there are others out there who are like me when I didn't know about this. And ignorance, for what I understand, is terribly a bad thing. Okay, so I'm helping create this awareness for us. Get life insurance, get the right one. Don't be comfortable with term life. Term life is robbery. You are helping the banks, you are helping the companies. You are not making gain for yourself. Convert that premium into something that can be, it's better to have 100,000 life insurance than to have $1 million term policy. 100,000 whole life compared to $1 million term policy, 100,000 whole life is better. Okay, so let us please learn out of this. Now, I have something here to also give us that awareness. Why has the next, which is the next question, why has this not been told us all these years? Why have we not been, you know, informed all these years? It is because, number one, we don't want to know, okay? We don't want to learn. We, sometimes because of the experiences we've been through, like I said, I have been through a few of them in the past that didn't work. When I heard this, I wanted to be sure it's not like those that I have experienced before that didn't work. Okay, I'm not that gullible. I don't quickly jump onto everything that everybody tells me. But if it sounds like good, I want to investigate, I want to research and dig deeper and to come to that conclusion that it is not good or it is good. And if it is good, I don't want to miss it. If it is not good, I don't want to waste time on it or waste my investment on it. Okay, so let's be a little open-minded. Let's not coil in and have a shield around ourselves because of past experiences. Otherwise, when the right one comes, we will not be able to identify it. So that is one thing we don't want to know. And number two, the agents, you know, they have this mindset about us, you know, from the Black community, that we don't have the means to purchase a good life policy. And the moment we call them and they want to explain things to us, they focus mainly on term because term costs very little. And they want to make a sale at all costs, right? So they will be quick to sell the term policy to us. And because the payment is not that huge, we jump on board. In the end, we are building savings for the insurance companies and the banks. So those are the reasons it's not been told. Now, the Black community, there are people who have uncovered this and they are selling it. In the United States, for example, there are people who are campaigning for this very, very loudly. They are trying to bring this to the awareness of everyone now. Life policy is a thing of old. It's a thing for over 200 years ago. In the days of the slavery in the United States and the world, the rich and the white people, they had some of these policies to protect themselves. They know how to make wealth out of it. And they designed it for their gain. When slavery got abolished and now the Black population grew, now we have to share things equally with them. And they are adopting every means to hide good things away from us. If you have heard it before, there have been cases when a community that is majority white, when a Black wants to purchase a property there, the value that they will sell the property to the Black person is higher than when they want to sell it to a white guy. That was a criminal practice. Some people, some companies have ended up in jail. Okay. All is an attempt to kick you out of the market, to kick you out of that community. And now that kind of discrimination and segregation, the law comes after it, after them. So we have to desire to know. We have to be curious, to know what is out there that can benefit us, what is benefiting them that we can also benefit out of. Do you know that life insurance, as we understand it, is supposed to be for life, but even banks and big companies are also purchasing life insurance. Go online and just do a Google search. Bank of America, Chase Bank, Citibank, Wells Fargo, all these banks, the FDIC insured companies that we think they are the richest companies, they have purchased life insurance in their billions. Bank of America alone, as of way back 2013, had 19 billion. I checked the records. I researched into some of this. 19 billion life insurance purchase for the organization. And we are in 2022 now. You can imagine how much wealth they've grown that into. And why would they buy life insurance? They are paying that much of premium, right? Because they know what they're going to gain if something happens. There is something they call key personnel policy, key employee policy. If you are a key employee like the CEO, the directors, any permanent employee of any company, the company has the right to purchase a life insurance to whatever amount. Life insurance is not like auto insurance where you can only insure your car in one company, right? You can purchase as much life insurance as you can afford. There are no limitations to that. So if you work for these companies, they will purchase life insurance on you just in case you pass away. They go make that money for their gains. Under the notion that they have to replace you, they have to train. How much does it take to train someone to take over a role? But they will use that opportunity to make a lot of money on your head simply because you work for them. So if the companies, the already rich companies and their CEOs are making that much of gain from life insurance, why shouldn't you and I, who don't have much, right? So that is the reason they are keeping it away from us. Now the information is out there. We are getting to know. So please, let's go get it. Let us not continue with the ignorance and lose out on this opportunity. Let's look at the urgency of this. How urgent is it? How critically urgent it is? It is absolutely urgent, particularly for those of us in our 40s, late 40s, 50s, late 50s, because as we age, as I started explaining from the beginning, as we age, our energy goes down, right? So there are things you can do today in your 40s and 50s that 10 years down the road, you may not be able to do. You may not be able to afford. Okay? So when we are trying to catch up, when we don't have much time to catch up, then it becomes even more important that we catch up more quickly. So you and I, unfortunately, in our 40s and 50s, we don't have time enough. This phrase right here on the screen, the agency of life, is a borrowed phrase from a man of God who wrote a book and called it the agency of life, and it made a lot of sense for me. So I'm borrowing it to make to establish my point here. There is that agency of life. Someone understood this or got to know this, and rather than to see it as something super urgent and look for money and buy as little as he can afford as quickly as possible, he procrastinated. Oh, I would do it. Oh, give me a little time. Oh, I have bills and all that. Of course, you have bills. But it turned out that he went to the hospital and got diagnosed with some form of cancer. When he came back, he wanted to now purchase the policy to cover himself. And of course, the insurance companies, they are not stupid. They will do their research. There is a system they call MIB. I think it's Medical Information Bureau. That system, whatever your most current diagnosis is, the hospitals will record it in their systems. And because people have the tendency to lie, the insurance companies will have that right to research in that library of medical information, and they will come up with it. So it turned out they saw that the guy had just been diagnosed with cancer, and he couldn't buy a policy. A lot of people get denied. And even when you are the type who are not, a little careful with your driving and the police come after you all the time, you get ticket upon tickets. If you have consistently 3 tickets, that's it, you will not qualify. If you are diagnosed with an illness, you will not qualify. The more you age, the more expensive it will be. So the urgency is for us to do it now. Even if it is so expensive, it is something that you need to do now, because you will realize that it is super, super important when it's too late. Okay, so I encourage us, anyone who is listening to me through this video, if you want to reach out to me for additional information, feel free. My number is +1. I'm in the US, so +1 301 828 7585. Right. My number is +1 301 828 7585. If you want to call me, feel free to call me. But again, I'm not an agent, but I can advise you. I can point out to some of the good agents that I know, some of them from African descent, who understands this. They understand our culture, they understand our world. They can advise you based on your ability. But then it is an error for us not to think ahead today when the sun shines, so we can make hay for the days that there will be no more ability for us to earn income. Again, please like this video, share to friends, advise them. If you tell someone this and the person protects him or herself, they will thank you. They will thank you. Okay? If you tell them or you show it to them and they don't use it, you've done your work, you've done your part, you've done your job. But then, please, let's take the initiative, no matter how little, no matter how small a coverage is better than nothing. But if you have a term policy, please rethink into it. Don't let that payment go to waste. Transfer that into, some of them are convertible. You can convert a life policy into a term policy into a life policy. Of course, the premium will change. It will be bigger, but that is better for you because anytime you pay, you are paying into your own account. It's not something that the company will take away from you. And then also, when you convert a life policy into, when you convert a term policy into a life policy, you may not do EOI again, evidence of insurability. You may not do it again. Some of them have those, some of the policies have that kind of rider that when you convert, because they've already done the EOI on you before they even gave you the term policy, when you convert into a life policy, you may not be, do evidence of insurability again. Evidence of insurability, EOI, is when you have to bring a medical report for them to know how healthy you are before they sell the policy to you. Because if it shows that you have any health issue, the premium either will be higher or they would deny you. You won't be able to purchase it, okay? Because they don't want to purchase something that is risky. Somebody already, heading down to their grave, they don't want to insure that kind of person. Right? So if you have a term policy and you have that rider that you don't have to provide evidence of insurability again, then you may have had it for 5, 10, 15 years, it doesn't matter. You now can transfer into a life policy and you don't have to, whatever health situation you are right now wouldn't be a problem. You can convert that. I think you may not be able to increase the face value, but then at least you can convert the same value into a life policy. And if the premium is too much for you, you can decide to downgrade a little bit so you can afford it. But we should see this as critically important as we will see the purchase of a home, the purchase of a car. That's super important, even more important, because this one will insure your life. You insure your home, you insure your car, you insure your phone. Why don't you insure you, the person who is in this, using these things? Okay, so insure yourself against any contingencies. And it is not when you die. It is as good as when you are alive. Thank you, and God bless.